Here's the truth. Billionaires like Elon Musk, Jeff Bezos, and Warren Buffett don't get rich the way you think. They don't make money, they create wealth. And they've found a way to live like kings without ever technically earning a taxable paycheck. It's called buy, borrow, die. And once you understand it, you'll realize the game was never designed for people who only work for a living. Most people think wealth is about how much money you take home every month, your salary, your tips, your commissions. That's income, and income is taxed hard. In the United States, the top federal tax rate can hit 37%. That's before state and payroll taxes sink their teeth in. The rich, they see income as a problem because the moment they earn it, the government gets a massive cut. Elon Musk, official Tesla salary, $0 for years. Jeff Bezos, $81,840 when he was CEO of Amazon. Mark Zuckerberg, just a single dollar. They're not getting rich from paychecks. They're getting rich from assets. Step one in buy, borrow, die is to buy, but not just anything. Billionaires buy assets that go up in value over time. Stocks, real estate, businesses, intellectual property. They don't buy to flip, they buy to hold. Here's the trick. As long as those assets aren't sold, they aren't taxed. That's called an unrealized gain. If your stock goes from $1 million to $5 million, you just got richer on paper. The IRS can't touch it until you sell. So the wealthy simply never sell. But if they're not selling, how are they paying for mansions, jets, and super yachts? That's where the magic of borrow. This is the part that flips the entire game. Here's where billionaires turn paper wealth into actual spending power without triggering taxes. They walk into a bank and say, I want liquidity, but I don't want to sell. The bank sees billions in assets, smiles, and offers a low interest loan, usually around 2 to 3%. Let's put numbers on it. If you have $100 million in stock, a bank might give you a loan of $50 million. You take $5 million for living expenses, invest $20 million into new projects, and let the rest sit in assets that keep growing. You only owe interest, and in many cases, you can deduct that too. Compare that to a regular person borrowing money. You're paying 18% on credit cards, after tax income on a mortgage, and you're considered high risk. For the rich, they are the collateral. The bank is practically begging them to borrow. This cycle, buy assets, borrow against them, and never sell them, can go on forever, or at least until the final stage. And when that day comes, the wealth doesn't disappear. In fact, it resets, completely tax-free. That's where die comes in. When a billionaire dies, U.S. tax law gives their heirs an unbelievable gift, the step-up in basis. Let's say Grandpa bought $1 million of Apple decades ago. Now it's worth $10 million. If he sold while alive, he'd owe capital gains on the $9 million in profit. But if he holds until his death, the cost basis resets to the current market value. His heirs inherit $10 million worth of stock and owe $0 in capital gains tax if they sell immediately. This works for stocks, real estate, businesses, almost any asset. Combine that with trust structures and life insurance to pay off any loans, and the heirs get clean, debt-free, and tax-free wealth. So here's the game. Buy. Own assets that appreciate in value. Never sell them. Borrow. Use those assets as collateral to get low-interest loans for cash flow. Die. Pass assets to heirs with a step up in basis, wiping out decades of potential taxes. For the ultra-wealthy, money is just a tool, and the tax code is the rulebook. They don't play the game of earning and spending. They play the game of owning and leveraging. If you work for money, you'll always be taxed the hardest. If your money works for you, the system also works for you. There you have it. A breakdown of the most fair thing on planet Earth. If you want to see more videos like this, go ahead and like, comment, or subscribe, whatever you need to do, and I'll be back soon with the next one.